following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day in the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Peter Ustinov. The point of living is to believe that the best is yet to come. Market-wise, let's take a look at it out here. We have the Dow down 33, NASDAQ off 8, S&P's off $1.50. Gold contract up $3.10, traded $1,188 an ounce. Silver up 4 cents at $16.69 an ounce. Platinum flat at $1,118 an ounce. Copper $2.81 a pound. Light sweet crude up 29 cents at $57.80 a barrel. Bonds, we have the 10-year up 3 ticks, 128 flat. 30-year down 9 at 156.09. King dollar down 359 ticks at 97.10. That was after making that 0.618 retracement yesterday. King dollar, folks, wants downtown. Euro up 41 at 109.43, and the yen is up 33 at 123.95. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You get a flat market out here, folks. If we take a look at the SPY, the SPY out here is trading at a price point of 212.49. Volume's light, sideways move. It's down 22 cents. Really doesn't say much out here. We take a look at the NDX 100, the 3 Qs. What do you have with the 3 Qs? Same type of setup inside the 3 Qs. You get a sideways move where basically, well, we're down 20 cents, but it's really a sideways move at the highs. And what we certainly did have is that the amount of energy that the market expended on the way down on Tuesday and the way up on Wednesday is kind of basically building energy. And the real key is going to be, of course, is building energy to get up and over those highs that were generated in the NDX 100 on the 27th. That is 111.16. We go to the gold contract. We take a look at gold. What do we have with gold? Gold out here this morning, you rejected lower price, you had lighter volume, and that's exactly what we needed inside this contract, folks. We only did 50,000 contracts, and that's what you're looking for. It rejected the 1179 area. Bottom line is that we did the 50,000. You're inside 1184.80 once again. So what you have inside that structure is that you have the rejection of lower price, you have the lower volume. If we take a look at the rollover, now what you have happening right here, folks, is that the roll is happening out here in gold today. So the roll, specifically what that means is that future contracts roll from every 3 months. So now we're on the Q contract. And what the Q contract also did, which is important to understand, that also did lighter volume. The Q contract ended up doing 138,000 contracts versus 150. Bottom line, Q contract also closed inside the 1185. So on the Q contract, it's 1185.60. That being said, check it out, because this is what it's all about. It's all about the good old U.S. dollar. And what the dollar did, folks, the dollar did flat out 0.618 retracement, pretty amazing too, of the whole move down. When we take a look at this, we're at right now 97.13 on the dollar. And it's like, man, it's just, it's crazy when these things go right on the number, folks. This one did go right on the number. The 0.618 retracement was 97.83. We did 97.88. It stayed there for about a heartbeat and got out of there. And now what we have out here is this, and this is where you have a better confirmation that the dollar's going south again. You had a wicked, not a wicked expansion of volume, but a good expansion of volume. We did 62,000 contracts after hitting the high up there at 55. I suspect, we're at 97.14. As soon as you get back inside 96.29, you'll see a very fast acceleration on the way downtown. Bonds. Let's go over to the bond market. We take a look at the TLT. What we have inside the TLT is this. The TLT also looks like that counter trend bounce is basically over. So this is going to be wild watching how this shakes out because certainly what has happened in the marketplace is there's been divergence out there, meaning that we have gone down with the bonds going down in price, up in yield. Bottom line, last 5 days, the bonds went up and down in yield, and the market liked it. I suspect, though, what we have inside this bond market is a very large ABC structure on the way down. And on a technical basis, the dollar is set up to go downtown. Bonds are set up to go downtown, and the market's set up to go downtown. So I suspect what's going to really drive that deal, and this is going to be the bond market, with rates generating higher price. Doesn't have to be a lot higher, even if it's a quarter a point. The market itself will generate it before the Fed comes in. And the quirk in this whole deal is that if, in fact, that's what's going on, the dollar should be stronger. But I suspect what you actually have there is that the dollar is going to basically back off somewhat, and the dollar is backing off because what you do have is you have not a lot of large companies, but I just saw this come across the tape, and this is, interesting in itself, meaning that it doesn't make a lot of sense, but guess what? Large companies, no matter how much money they're making, are cutting back. And JP Morgan just turned around, which is the biggest U.S. bank by assets, and they just turned around and said over the next year, they are going to cut thousands of jobs. Not hundreds, thousands. Bottom line, that's a big number. So it's like, man, okay. So when you start putting that together, I'm saying to myself, okay, JP Morgan, just to give you an idea, I mean, they have 246,000 employees. But you're talking about a bank that takes in $98 billion and makes a fortune. So if they're going to start cutting back folks, what we're going to see here is that, unfortunately, folks are going to get out of a job, and those are good jobs. And that in itself, I could see the scenario that, yeah, bonds go up a little, market comes down, but the dollar normally would go up when rates are going up. But what you'd have there is that if people are losing their job, guess what? The economy is not going to be as vibrant as we expect it should be. Our phone number is 877-927-6648. Some of the Dow stocks out here. There she is. We got Big Blue down 37 cents. You get ExxonMobil up 12. Oxy's up $1. Walmart's down 25. We have Johnson & Johnson up 12. Big Mac is down 131. Now check this out, Big Mac. This is almost hard to believe, MCD. So McDonald's is coming down today with some real juice, folks. And what you have, and this is where just transparency and disclosure comes in a huge way. So Big Mac is down $1.32. It has the high volume swing low from December, which is at $87. The reason that Big Mac is down today, they're selling it off, is guess what? McDonald's plans to stop reporting monthly same-store sales. Bottom line, that's it. The company will provide same-store sales for June with the second quarter earnings report, then cease providing the data monthly. Bottom line, why? Well, folks, when you don't provide the same-store sales and you have forever, what does that mean? That means, guess what? Same-store sales are going downtown. That's the bottom line. So I suspect, let's put this on a larger basis. McDonald's is, the competition that McDonald's has, number one, is huge. And what the whole fresher concept is not only taking over, it's a steamroller, folks, okay? It's an incredible steamroller. And I suspect what you actually have out here is that most of these. Okay, so if we take a look at McDonald's on a much larger basis. We're at 95. We put this on a monthly. Yeah, this thing can go to 77. So what you have is that, when I was just saying it's a steamroller, what you have is that you have two different deals that are happening versus the McDonald's deal. You have the fresh concept, but you also have just the bar that people go up to and say, I want this, this, and this. They sit down. That business structure in itself is more conducive to less expenses, higher profits, faster intake and outtake. This is Tom O'Brien. This is TFNN. You stay right there, folks. I'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials down 40, Nasdaq's off 9, S&Ps are off 2.5. And as we do each and every Thursday, we have our man, Mr. Andy Heck, with us, growling and prowling with us. And don't forget, folks, Andy has an outstanding show right here at TFNN every Tuesday and Thursday, 5 to 6 Eastern Standard Time. You can get that show right on your cell phone, TFNN.mobi. That will get you the full audio. You want to get the video? Just go to TFNN.com, and on the right-hand side, you'll see the little box with device. It will say devices. Hit that. Our servers will know exactly what type of device you're on. You'll get Tiger TV delivered to your device. Now, when you get Tiger TV, folks, okay, at the bottom, what you're going to be able to see is this. You can put it on different speeds. If you want true HD, you can put it on true HD. If you want to slow it down a little, depending what your connection is, you can also do that. So check it out. It's a great tool. It's a great visualization tool, particularly because we are in the visualization business. Andy Heck, what's going on?
Hey, how are you, Tom? The beauty of technology, huh?
It's amazing, man. I'm telling you, it's so cool. It's just really crazy, man. You know.
Absolutely.
And
Absolutely.
you know, the cool thing, folks, is that coming across the tape out here today, and I always thought this should have been a lot sooner, but realistically, there was a couple things that came across the tape a little bit earlier today. And every single car, there's not going to be a car, folks, basically, well, that's what the news release looks like, that's coming out in 2016 that's not going to have just true internet in it. That, bang, you hit TFNN, that's it. Which totally makes sense. It's like, that should be easy. Do you know what I'm saying?
Oh, that's a no-brainer. Are you kidding?
Yeah, right.
Yeah.
Right.
Should have been there a long time ago. So, kind of quiet markets today. Gold, let's start with gold.
Okay.
Gold looked like it wanted to put in one of these key reversal days today, but it closed, let me just see, I think it closed just shy of yesterday's highs. Yeah, it did. It settled. But still decent action, but low volume. Look, I think these markets are fade everything markets, and maybe we'll go back up, head towards 1,200 again, sit in the middle of the range, see what happens.
Fade everything but the S&P, right?
No, I agree with that. No, that you have to sell. China gave us a big signal last night.
Oh,
that's
man,
for sure.
China was down 6.5% last night. Now,
Yeah,
granted, so check this out, though, but it was up 6.5% the last 3 days, too, so.
Right. There's some volatility in these markets.
Oh, man. How about that?
Question.
Yeah.
No question. Oil is, oil's trickling up and trickling down. It's kind of being pulled between bullish and bearish factors here. On the bullish side, the contango has come down a lot, meaning that the market has tightened a bit. On the bearish side, U.S. production is still very high, and there's still a lot of oil coming out of Saudi Arabia and the other OPEC members. So that's being pulled in two different directions.
What I thought was interesting, Andy, is that the Saudis, I guess they're meeting, whether it's tomorrow or the next day, but, the minister already came out and says, no, we're not cutting production. It's like, wow, this is interesting. I mean, you know what I mean? It's like...
Oh, more of the same.
Yeah.
Oh, there's another OPEC meeting.
And that's prior to that. I mean, he's setting it up. He's telling people, no, we're not cutting production. It's not going to happen.
He wasn't telling us. He's telling the Russians that.
I got it. Okay, cool. I got it. That's what I was asking. Okay, cool.
Right. It makes sense because he said, hey, whatever you say, we're not doing anything because, Putin wants them to cut production.
Sure.
He wants higher prices. But, hey, the Saudis, based on the price action, they're doing the right thing.
Yeah. Oh, yeah.
Absolutely.
Listen, man, they can't lose their market share. That's what it's all about, right?
Yeah. Tom, I'm working on. We haven't announced the date yet, but I'm working on a webinar.
Yes.
That I'm going to announce probably next week. I'm going to talk to Tommy about it tomorrow. What we're going to do is we're going to look at the dollar versus commodities. I've been doing a lot of work on this lately.
Yeah.
And one of the interesting things is that the volatility. And volatility is a very important measure when you look at the technicals of a market.
Right.
The volatility of currencies and of the dollar is very low. the volatility of commodities is much higher. In many cases, double and triple what it is in the dollar. But the dollar is driving commodity prices.
Right.
So I'm working out a way to do a little workshop on showing everyone how to kind of profit from looking at, since the dollar drives commodity prices, following the dollar, but kind of positioning, using options, futures, and some ETFs and ETNs in these more volatile commodities based on what the dollar is telling you.
No, it's a great idea, man. I mean, what I love about trading the metals in general is that, you can look at the dollar on a continual basis. And what does happen, and this is when it gets really crazy, folks, is that whether they're pushing gold and silver higher and or lower, and the divergence is out there inside the dollar, meaning higher or lower. This is pre-market, because that's when you can get a small edge, and that edge only lasts by about 5-10 minutes on a smaller basis. On a larger basis, if you do understand where you think it's going to go, it's a big deal, man.
Right.
Yeah.
And if you look at the nominal moves in the dollar moves 1%. Certain commodity prices are going to move 3 or 4%.
No doubt.
So the key is to earmark and sniff out which commodities are most dollar sensitive, and that changes. That changes over time.
It does.
So it's I'm working on that. We'll be doing that. The other thing I wanted to talk about with you today is, since we're in grilling season and we're both carnivorous traders, some action today in the cattle market and the hog markets.
Okay.
Cattle are trading at the highest price now on the August contract since January. So we're picking up there around $153 a pound on the live cattle.
Yeah, with volume. Okay, so this might be an ABC up. Let me just look at this.
I'm loving it, man. It's happening early in the season, and look at the feeder cattle, up almost 4 pennies today.
Oh, you should see this expansion of volume, folks. They did huge, 41,000 contracts. That's an ABC
actually, on all contracts, 87,000 contracts today across all contracts. And open interest is rising with price, which is a very bullish technical signal. Remember, open interest is the amount of open but not closed long and short positions.
Sure. So let me just see this. So $1.38, $1.38. So 12 cents, 43.53 gets you 55. So it's an ABC to 155 at least.
Right,
so
at least.
That's going to get interesting. So 150. Well, 156 is the next swing point. That's from January. Pretty cool, man.
Absolutely. Yeah. Pretty cool. And now let's look at the hogs, because that thing is knocking on the upside resistance here. And I think the hogs can go up to 92.5 cents. So on a percentage basis, that might be the play, because hogs, Tom, from a fundamental perspective here, are the other white meat. And what's going on with chicken and other poultry with the avian flu is very supportive for the hog price. So you got the fundamentals working for you, and I think you got the technicals looking very similar to the way they look in the cattle.
Yeah, you do. You do. You say, big volume, man.
But that one I like up to 92.5 cents. So that 76. On a percentage basis is a much better play.
Yeah, it's if you can take out. So this looks like it's going to be an ABC up. If you can take out 85.30, you get 90 A to B equals C to D, and the volume expanded big time on this. Hey, let me ask you: as soon as we come back, we'll talk about. I want to talk about this chicken deal for a second.
Yeah, chicken sneeze and hog squeal.
You stay right there, folks. Andy Heck, Tom O'Brien. We want to hear from you. Our phone number is 877-927-6648. The Dow's down 52. Nasdaq's off 13. S&Ps are off 3.5. We're going to be right back, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow down 47, Nasdaq's off 11, S&Ps are off 2.5. We're talking to our man, Mr. Andy Hecht. Andy, folks, also has a great newsletter. It's the Techno-Mental Commodity Report. You can test drive it right here, 30 days, absolutely free. Go to our website at TFNN, go to newsletters, go to trading newsletters. You can test drive it 1 month absolutely free. So when we talk about the avian flu with the chickens, right? Now, they have to kill the chickens so it doesn't go to the next chickens, right? That's my understanding, right? But this isn't this isn't something that gets into the human deal, right?
Well, I don't think so. They say it doesn't, but in Asia a couple of years ago it did.
I see.
The virus can mutate, but what they're doing is they're being very. I mean, our health standards are a little bit different than in China, and they've already killed and incinerated some 40 million chickens.
Yeah, so it's dangerous. That's the bottom line.
Dangerous.
So,
I mean, any
when
virus can mutate.
so no, I get it. Then that brings us back to the hogs, right? Because then the real question is that even if there's a minute chance, it's like, okay, do you really want to eat chicken?
Right,
Even though
exactly.
I had some last
it's
night.
Substitution, and it is the other white meat. By the way, so did I have some last night.
Yeah.
But it's the other white meat. And look, hogs are going to benefit from this this avian flu thing, and it's technical here, Tom, because the fundamentals are and the technicals are lining up here and telling us that it could go from currently below 85 cents up to 92.5 cents, and that is a big move.
Yeah, and now it's so wild too, and when you think about it, is that last year at this time. This is when the hog market was having a problem because they had the little hogs would get dying off, right?
Yeah, the PED virus last year, which killed 7 million suckling pigs last spring, and that was the issue there. But this time, it's really another animal protein market that's going to force the hogs higher, and also higher beef prices. Where we see beef is also positive for pork prices because pork is so much cheaper. Actually, right now, the intercommodity spread, the hog versus beef spread, is at about 1.83 pounds of pork value in each pound of beef value. And that was as high as 2.2 pounds of pork value in each pound of beef value a couple of months ago. But the long-term norm is 1.4 to 1. So it's coming back. And that's why I love to look at these intercommodity spreads. They tell you a lot more about value, real value, than the nominal price does.
Yeah, no, I can definitely see that. There's no...
Right. Now, chickens, we can't monitor the chicken price so much because there are no chicken futures. So what we're doing is we're really monitoring hogs as a proxy for chicken here.
Yeah, which totally makes sense. No, I can see that.
Absolutely. So very interesting. And hey, it's grilling season. So this is high demand season for meats. And, although it's always grilling season where you live and I live, in the rest of the country, people have their barbecues out and they're putting the steaks and the burgers and the ribs and all the good stuff and even the chicken on the grill. And this is the demand season. So we're going to see some volatility here, for the next couple of months. And it just started. It doesn't end till mid-September.
Yeah, no, I can absolutely see that. So let's switch gears and go over to the natural gas market.
Oh, ugly today, huh?
Yeah,
well,
the numbers,
you know what? Not surprising.
Numbers came out.
Numbers came out. They're back over $2 trillion in inventories, which is not a surprise. I think it was a increase of about 112 BCF today, brought it up to over $2 trillion. This is not a surprise at all. However, I am smelling something bullish in this move down. And what I see here, if you look at my chart, you see that open interest in natural gas has gone from 1.055 million contracts on May 18th dipped down now to about under 980,000 contracts. So when price falls and open interest falls, it's not necessarily bearish.
Okay.
So that means that you don't have new positions coming to the market. I think we're going to have volatility in this market back and forth. We traded up to 315 a couple of weeks ago. Now we're going to go test the low side. Support is at 254. I think we're in trading markets, and I think that you have to, when it looks ugly, you have to hold your nose and buy the dip, and when it looks brilliant, you have to close your eyes and sell it.
Well, man, Dave from Clearwater, I know he nailed this on the way back up, and he's sitting there waiting. And what's so interesting, folks, okay, that was a monster move, by the way. When you go from 260 up to 320, folks, okay, that 315, it's huge. I mean, it's
huge move.
It's $5,000, right?
Right, and 315 down to 272 is big too. Huge. I mean, these are big money moves. This is a huge 15-16% moves in in a commodity in 2 weeks. Natural gas is a beast. It is a beast, but it's going nowhere. So you can make a lot of money trading it when it goes nowhere.
Yeah, no doubt. So just we'll go back to this dollar for a second. So it's going to be interesting in this dollar now. Then, you know, I mean, you may have heard me. I mean, it's amazing that it did a 0.618 right to the T too, right to the 100th. So.
I think the Greek thing is going to drive it. I think that it's a lot more fundamental than technical here. So, and this Greek thing, no one knows what's going to happen here because no one knows what the Varoufakis and Tispiris, the president and finance minister, are going to, whether they're going to compromise or whether they're going to be difficult, and what the Germans are going to do. And I think that's really going to drive it. But within the currency market today, there's a nice divergence, you know?
Yeah.
So you got the euro up, you got Canada up, but you got the Aussie dollar, which is the commodity currency, is down. It's down hard. It's down 70 points. And that's China, man. That's China. So China's also going to play a very important role in the dollar and what happens.
Yeah. Well, and folks, you know, what is amazing is that not only that, you know, Europe didn't get hit, we didn't get hit, and that is not that it's totally unusual because, you know, Shanghai has been going up for quite a while right now. But that'll change. I mean, if Shanghai comes down another 6%, you know, tonight, get out of the way, folks, okay?
Keep your eyes on that market tonight. Listen, one other thing I wanted to show you, Tom, because I think this is real important. I want you to put up a cocoa chart.
Okay.
And, you know, cocoa has had one hell of a move. We moved from about $2,682 a ton all the way up to $3,181 a ton on May 21st. And now it's rounding, and it looks like it's going to come off and back and fill again. And last week in the Technical Commodity Report, we took a 10.5% profit on a cocoa ETN product. But if you're still in this cocoa, I would recommend, you know, kind of trimming the position or getting out here, because you know the rest of the commodity sector have come off. Cocoa looks like it could back and fill once again here. I still like it long term, and we'll wait to buy the new dip, the next dip, but it looks like it's running out of a little bit of steam here.
Well, it's certainly, the thing is amazing. If you were in this physical business, folks, this commodity business, man, you gotta sell when it's, you know, when you can sell, I guess, as Dave White says, not when you have to sell. Because I'm looking at this, I mean, you know, cocoa has just gone from 2,600 to 31. Like, that's huge.
It's a huge move.
I know.
Huge move. But now it just, you know, when it starts to run out of steam, a lot of people make the mistake, well, it's just consolidating. You gotta take your profits. If it starts up again, you can always buy it higher and ride it the next way. You cannot, you just can't be, look, in these markets, bulls make money, bears make money, pigs get slaughtered.
That's a fact.
And the bottom line here is in cocoa. I took a look at it last week, and even though I still love it, I had to close my eyes and take profits in it because I think this is a year for trading, not for investing.
Yeah.
And there aren't any massive trends developing here.
You know, it's interesting, Andy, as we're speaking right now, it seems that these, I guess they've been up all day. I'm looking at these gold equities, and for gold not moving, these equities are just starting to move. And this is always intriguing, folks, coming into the closes when this happens, because it's like, particularly coming in on a Friday.
I agree. Yeah. And listen, I kind of like the action in gold today. I wish it would have done a little bit more volume. You know, the last 2 days in gold, we did over 340,000 total contracts.
Yeah, on the way down.
Today we're doing like under 200,000 contracts, but it was it couldn't manage that key reversal to the upside. It tried today. You know, we made a lower low and then we made a higher high, but we still closed within yesterday's range. But it's a real quiet day in gold. You know, it's a $12 range. We're still under $11.90. You know, I don't know. Listen, tomorrow's crazy Friday. Anything can happen in these markets. And you know what? Given we're closer to the bottom end of the range, I would say you're probably likely to have a $10, $15 update tomorrow to take it right back to where we closed last Friday in a big nothing.
Yeah, unless you're in it, then that's $1,200. So that's
Right.
good.
No. That's true. That's true.
Right.
That's true. It's just within the range.
No,
I'm
I'm
kind
with
of
you.
waiting for it to break out. I want to see this thing fly above 1230 or dose below, 1088, 1100. For me to get really excited about something developing here. I just don't see a lot of, and I agree with you. These are great opportunities. You could trade these back and forth 10, 15 times. You make a lot more money than riding a trend.
Totally. Listen, folks, you stay right there. 5 to 6. Our man, Mr. Andy Heck's going to be coming up. Andy, thank you so much. You have a great one, a safe one. Of course, we look forward to the show in an hour and 10 minutes.
Take care, Tom.
Okay, stay right there, folks. We're coming right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now are down 41. Nasdaq's off 9. S&Ps are off 2.5. And don't forget, folks, at TFNN, we broadcast 10 hours of live content every trading day. John Logan, live from the Philippines, kicks us off 8 o'clock in the morning, folks. 8 to 6. Get all that programming right on your cell phone, TFNN.mobi. Now, well, coming into this closeout here, what you're gonna have, we have a light volume day, sideways market. Bottom line is that we'll see where this shakes out tomorrow morning. It's a short 4-day week coming into the weekend. What you do have, and this is where this dollar, I suspect, no doubt, is going to play a role once again. And the market itself, folks, changed in texture that the market doesn't like a strong dollar. The dollar had topped out in March of 2013, March 13th, rather, 2015. The extent on the way down was pretty intense. We had one counter trend bounce. The dollar had gone from the 100 point down to 96, bounced back up to 100, and then just went straight down from April 13th going into May 18th. You did a nice bounce. You did a 0.618 of that, and now you get the turn. So the real key, one of the keys will be tomorrow. Will you get back into the 96.53 area? And right now we're at 97.18. And do you have the volume expand? If we don't have the volume expand as we move back into that lower price, what that sets up is, guess what? That's going to set up a higher dollar. So that's going to be a big number. If we take a look at the actual S&Ps, what we have inside the S&Ps right now is this. We have a sideways move today. You have light volume. You can make the case that we're pushing into the highs on the S&P with light volume. Now, that case inside the NDX 100 is different, and this is why. The NDX 100 did have an expansion of volume yesterday, and it was a decent expansion. We take a look at the Qs. The Qs did 30 million shares. So the Qs basically, even though we were sideways here, the Qs are saying, hey, we can go test that high that was generated out there on the 27th of April. That high is 111.16. And we'll see how this shakes out tomorrow morning. I believe you get some job numbers coming out tomorrow morning. Bottom line is that it's going to be interesting to whether they're buying and or selling coming into this weekend, and that's kind of how this thing is set up right now. The S&Ps, the way they're set up is that no, they don't have to go to the highs. The Dow Industrials, same setup there. The Dow is not off its high by a huge amount, but it is off its high. Putting the juice into the Dow Industrial today, even though we're down, is you have DuPont is up 64 cents, Intel is up 27, Pfizer is up 15, and Merck is up 22. Taken away from it on the way down, you get Big Mac is down $1.33, Caterpillar's off $1.95, Boeing is down 68, and Nike is down 22 cents. If we go over to Nike, the thing that's going to be interesting about Nike is that Nike technically is set up as a very strong stock. I suspect what's going to happen, though, is that there's going to end up being a rat inside the aspect of all the folks that have got indicted in the soccer deal. And the way that it looks like it's structured is that it looks like Nike was the one. This goes way back, too, by the way. That Nike is the one that actually got the contract with. It didn't necessarily say that Nike's bribing anyone, but bottom line is it looks to me like that is going to put more selling pressure on Nike. And most of the time what happens is this. These things come out of nowhere. So Nike is set up to do an ABC structure on the way up. It could turn into a complex one. I suspect that's what's going to happen. And what that would mean is that you're at 102. That means Nike would go back to 97, 67. It'll do it on lighter volume, and then it'll bust topside once again. So this is going to be wild watching this whole thing shake out, no doubt, because the amount of money that was changed hands and the amount of bribes is pretty incredible, no doubt. If we go over to the XLF, the financials are still hanging at the highs, folks. In fact, it looks like the way that the XLF is set up is that the high that was generated out here May 20th looks like it's going to get tested. Right now, the XLF is at 24.84, and that high out there is 25.04. The XLE Energy, different ballgame, totally different ballgame. Energy can't hold it. The XLE is trading at a price point of 78.50. You're down 29 cents. You have juice behind the move. XLE is making its way back down to the bottom of this 73 area. What you do have inside the oil market is the amount of shale oil is huge. That it seems that the way that they're setting that up is that each and every time that oil is getting to a higher price, they can basically turn on the spigot, and that is going to put a top on the oil market, folks. That's what's going on. And I suspect as the months go forward, we'll get a much better understanding about how many well heads not only are out there, but how many well heads get turned on and where they get turned on at what particular price. Because you can imagine just a second that we all have oil wells. And we're at $57.88. The real key is going to be, where do we make money? Let's say it's $60, $65. Well, what you're going to have, this is going to be, as it's approaching that level, it's going to be who turns the spigot on first to push the product out. As soon as that happens, what ends up happening? Of course, as soon as that happens, more supply. Even if the demand keeps up, there's still more supply. You're pushing it out. That's the cap on top of the oil market. So with that said, it would seem that the surprises inside the oil market are going to go to the downside. Why? Because what ends up happening is that when you can turn on supply at a certain price, and that price being, let's say $60, $65, it's not outrageous. The other side of that coin is that any type of slowdown in using, whether it's the oil itself as heating oil, as jet fuel, as diesel, and or the byproducts, meaning the gasolines and the plastics, you get a slowdown, that's going to affect that market very quickly. And so it looks to me like that cap is on there. In this particular case, when you look at oil, what it's done thus far is pull right back to the strength of April 15th. That was a decent day. So I suspect you're going to bounce around here a little. This is Tom O'Brien. This is TFNN. You stay right there, folks. I'm going to be coming back with some numbers for you. Dow Industrials are down 31. Nasdaq's off 7. S&Ps are off $1.50. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling, the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's gold report.
You are too much, Marty, man. That is so cool. But listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night, folks. This is a quote by Robert Brought. Remember that there's a part of life for which you are the explanation. How cool is that? Market-wise, let's take a look at it out here. We had the Dow Industrials down 36, NASDAQ off 8, S&P's down 1, gold contract up $2, traded at $1,188 an ounce. Silver up 4 cents at $16.69 an ounce. Platinum $1,117 an ounce. Copper flat at $2.81 a pound. Light sweet crude up 35 cents, trading at a price point of $57.87 a barrel. Bonds, the 10-year up 4 ticks, 128 flat. 30-year down 10 at 156.08. And King Dollar down 364 ticks, trading at 97.10. The euro up 44 at 109. And the yen up 32 at 123.98. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have out here? Bottom line, you get a sideways market. You get no volume behind the market. Your SPY is trading at 212.46. You did 71 million shares. You know, coming into a Friday, more than likely you're going to see this try to get into these highs once again. The NDX 100. Now, this is the big one, folks, because what you had with the NDX 100 yesterday was this. NDX 100 went higher, had some juice behind the move. The high of the 3 Qs, we just use the 3 Qs for a second. High of the 3 Qs is at 111.16. Right now, you're at 110.71. We've hit 111.01 today. If we actually take a look and we bring the futures up, what you're going to see inside the futures is that the NQs are trading out at 4539.75. Your high up there is the 455.50. So what the NQs did yesterday is that they did push into their high and they had some juice behind the move. So I expect what you're going to see is that you're going to see that 455.50 get tested tomorrow. So that's up about 15 NQ points. You know, if you haven't test drove the Nadex platform, folks, come over to our website at TFNN, and you'll see the banner on the top and on the side. You can hit that banner, bring up the account. They'll put $25,000 of paper money into it. Tomorrow morning, don't forget we have a great show at 10 o'clock in the morning. My son Tom, me, and Daryl Martin do it. And what the Nadex platform has done inside this, if you trade futures inside the NQs, you're going to see how vibrant it is. The spread is 1 to 2 ticks. You go on the 80-point spread and go on the middle. Bottom line, you have defined risk with a lot less money you're putting up and more leverage and less risk when it runs away from you. So check it out when you get a chance. Yeah, Jay, there's no doubt. I know it's sweet. There's no doubt about it. If you trade futures, folks, even if you don't trade futures, you want to test drive it. But if you're ever a future trader and you like trading the NASDAQ 100, go check it out because you'll see how that defined risk, what we're talking about. Gold contract. What do we have with gold? And tomorrow morning on gold, folks, okay? Fridays on gold, particularly when gold has been laying at lows. They had last 2 days we had big volume on the gold market on the way down. Today, what we had is this. We had a rejection of lower price. You had lighter volume. That correlation, we're at 1188. That correlation is saying tomorrow we're going to have some action, meaning my take is that we're going to be going up, because what we did do is that we had the rollover started today, folks. So most of the contracts are in the queue right now, meaning the queue contract. We're at 1188.70. We went to lower price, rejected lower price, had lighter volume. That's saying you want to go topside. Now, that correlation with the correlation of what the dollar index did, the dollar index, folks, did a 0.618 retracement of the high from 100.79. Now, a 0.618 retracement goes like this. First off, a 0.618 retracement is a strong retracement. So that's saying that the dollar is strong on a counter trend move. You know, when you're looking at retracements, you have a 0.382, that's normal. A 0.50 is also normal. A 0.61 is a strong retracement. So that's what we've had. We hit it. Now, what the dollar also did is it came off that 0.618, and then we had an expansion of volume on the way down today. We had some good price spread inside the contract today. The contract was at 97,760, and it ended up at 120. So that's a 500 tick move, which is a big move. Now, when you take the dollar and we take gold, the dollar's saying, hey, what wants lower price? In fact, it may be an ABC structure on the way down, because we still came down with 100,000 and 102,000 on the way down contracts. The most we ever had going on the way up is that we had 65,000 on the way up. So your correlation is still there that you very well could have a very large ABC structure on the way down. So we'll see where that shakes out. But what that is saying, that's saying that tomorrow morning there's going to be a lot of action inside the marketplace. We go look at the bond market, and we use the TLT to look at the bond market. What we have in the bond market is this. The bond market also looks, folks, that it's going to make a little turn here. The bonds got to a higher price today, had dramatically lighter volume, and gave it up on price. The 10-year got to a price point of 128.03. Couldn't make the swing point. The swing point on bonds, folks, is 128.06. It's pretty amazing that I couldn't make the swing, because you're talking 3 ticks. The contraction of volume was dramatic. We only did 1.7 million contracts versus 2.7 yesterday and versus 2.4 the prior day. Now, you also have a turn there that's coming on the marketplace. Bottom line, though, it makes a difference. And no doubt tomorrow morning what it's going to be all about is not only the GDP, as one of the targets says inside the Tiger's Den, it's all about what are the revised figures also for the GDP. The thing that's pretty wild about the GDP in general, I believe this last week, the statistic office of the GDP said they basically were having a problem getting us good numbers. So that in itself is pretty wild. Our phone number is 877-927-6648. If we go over to these NQs just for a second, what you're going to see is that they're going to end up being flat at the close out here. So something is moving these NQs. They were down $6. They close right now, basically. But let's just take a look at and we'll have these numbers. So coming into the close out here, you had the NQs go from 35 to 43. Right now, you're at 4.5, 4.3, flat market. That's how this thing is shaking out right now. That's if we go over to Big Mac, McDonald's. McDonald's had a tough day out here today. What you have with McDonald's, and this is a big heads up, folks, for old school restaurants. Big Mac came down with volume today. It's still at highs, and we're still talking $96, okay? Technically, it looks to me like this thing wants to trade to $70, okay? Fundamentally, this is to me, this is like a heads up beyond belief. And what it is, folks, is this, is that McDonald's came out today and said, okay, their next conference call is in June. They will come out and give you same-store sales for June for the second quarter. But then that's it. After that, guess what? The company will continue providing quarterly comparable store sales, but they are not going to provide monthly same-store sales comps. That's a huge problem, folks. Why? Why don't they want to do it? They don't want to do it because if it's good news, of course they're going to do it. They've done it forever. They changed the structure, and every time that large companies change structures like that, guess what? You're going south instead of north. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials are down 36, NASDAQ off 8, S&Ps are flat.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go over and take a look at these the trainees, because what has happened inside the Dow Industrials in general is that the transportation index, folks, not only came down. I mean, this thing is down hard, and when we take a look at the high that was generated, it's quite a while ago. The high that was generated in the transports go back to November of 2018, and it's always wild when you look at something like the transports or any large sector before the rest of the sectors come down. And, with the Dow being at highs, it's like, okay, the S&P is at highs, and say, how is the transports down this low? What you also have is this. What the transports did out here today and this week is that they got into the lower range. So the transports had broken out in October. October of 2014, they go topside, and they go topside really well. I mean, they started out at 7,700, and they ended up at 9,300. We're back at 83 now. Now, back at 83, as soon as you tucked under the 87.14, bottom line, what's the heads up? The heads up here, folks, is that October swing low. And we're right next to it right now in the transports. The transports today came down 76 bucks. We're at 83.67. That high of that October 15th swing low is 81.69. So you're talking 198 points away from it. What you want to wrap your head around is this. The indices themselves at highs have been at highs for 6 months. Each and every time that we back down, next day it goes right back up again, right? How this transportation index hits this October 15th level is going to release a huge amount of information to the marketplace. And what you're going to be looking for is this. Thus far, it looks like we're coming into that with dramatically lighter volume. And we'll see if, in fact, it hits it tomorrow or it comes right before it and gets some rest over the weekend and then comes into it. Because if we trade into this level, which is the 81.69, and the bottom of that level is the 7,700, so you get a 469-point spread. If, in fact, that you trade into that too deep, that's saying you're going to go to the bottom of it. You support the bottom of it. Okay, that's the support. You break the bottom of it, and what you're going to see, the information that you're going to get released there is the type of information that it brings the probability much higher that the S&Ps, the NASDAQ, the small caps are also going to be down there. If we go take a look at Delta, what you have with Delta Airlines is this. Of course, Delta's inside of that. We take a look at Delta. Delta is off its high of 51. You're at 42. That October 15th swing low is 35. That's a long way down from where we are. United, we take a look at United Airlines, and evidently, the way it seems that the airlines are shaking out, it just kind of looks like that the airlines are going to basically put too much production or supply in space, in production rather. So United Airlines is trading at 53. The top of the October 15th swing low is down there at 45. So those babies, that is one of the first full sectors that are coming down into that October 15th swing point. The September, yeah, that's one of the first sectors that we've seen thus far that is running into that swing point. So it's a big heads up, no doubt. If we go to the oil market for a second, we go to ExxonMobil, XOM. What you're going to see with ExxonMobil is this. It looks like, folks, that we're going to have really cheap oil. Exxon's trading at 85. It's that pushing sideways today. Volume on a weekly basis has expanded dramatically. You have the swing low out here that's established at this particular point for March 13th. That's at 82.62. It's going to go after that swing low. We'll see whether it takes it out. That's on the smaller basis. On the larger basis, if in fact we barrel into that swing low, this could be a monster ABC down because it's been a straight move down from 100. ExxonMobil started from 104, goes down to a price point of 82. So you're talking 22 points. Your C point on this is 90. That would set up a 68 price point. And what we do have is that the lowest swing point on here going back to 2010 happens to be a 55. That's where it's going. No, it's 67. There are two swing points here. Let me bring this back so you can see how this is set up. It looks like this is going right after the August of 20. Oh, that's wild. August 2011. That's what it's going after. You know, because what we have done inside the ExxonMobil and inside that XLE is that it was a false break topside. The false break we're talking about was the highs of 2007. So you got over the highs of 2007. You come back underneath them. And you come back underneath them with volume. When it reached the high in ExxonMobil in June of last year, this is amazing. We're going to be in June of 2015. At June of 2014, we're at 100.61. We did 208 million shares. We come off that downtown with 400 million shares. That was in December. In March, we did 330 million shares. So this is building huge amounts of cause to get into lower price. If we go to CVX, Chevron, we take a look at Chevron. Chevron's trading at 103.24. This is like, you know, this is where the deal comes, you know, fundamentally. You know, are these going down because there's so much oil out there? Are they going down because of the fact that we might have a slowdown coming up? It looks at this particular point, folks, that it's strictly, not strictly, it looks like at this point, though, that it is absolutely how much oil that we actually have out here. Chevron, the setup on Chevron is incredible, meaning the high volume swing low is just sticking out like a sore thumb. I mean, it's huge, too. That high volume swing low we're talking about is just a few months ago. That A point is 135. The B point is 98. So you're talking about a 37-point A to B. Your C point is $1.12, which gives you what, 40. So that's $1.70, $1.68. No, 68. Oh my God. Hold on, let me pull that back. Yeah, it does. It gives you 68. We pull this back. We do this on a monthly. So what you have there, the lowest swing point, which is going after, yeah, well, it's not 68. The lowest swing point it's going after is 86. This is Tom O'Brien. This is TFNN. You stay right there, folks. Of course, we're going to be coming back for another half hour. Then our man, Mr. Andy Hecht, is going to be coming up with you, growling a problem with you. Dow finished down 36. NASDAQ was off 8. S&Ps are off 2.5. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the TFNN.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 877-927-6648. Give us a call, folks. I know what's going on in your world. Now, in the world of Google, folks, this is really cool. So Google right now is just they're having a huge conference. And this just literally come across the tape, okay? So check this out. What Google just announced at its IQ conference is a bombshell for the future of the company. For years, the search giant has witnessed, I'm reading you a Bloomberg article, okay, folks? For years, the search giant has witnessed the chipping away of its core product, search, due to the rise of mobile applications and their off experiences. Users are engaged more and more with programs that have no attachment or often need for search on the broad web. And as a result, Google's position as owner of our habits, interests, and needs on the internet have looked increasingly at risk. Today, Google may have just changed its trajectory. And this is what it's done. The company demoed a new feature on its Android OS system, which allows its Now service, a dashboard of notifications focused on your life and interest, to plug into a layer that essentially hovers above any app running on your phone or tablet. Activated by the home button, it's always there. This means that you can get contextual search information almost around anything you're doing, provided that there's the text and data that Google can pull from the app itself. And the best part is that developers won't have to make any changes to their existing software to allow the new service, dubbed Now on Tap, to bring search and context into the user's view. Now, I have an Android, and I believe what they're saying is this. So picture, when you're on an app, you're pulling anything up. It doesn't matter if I'm pulling a company up, if I'm pulling, you're going somewhere, pulling a restaurant up, whatever. Once you pull that up, what I believe this is saying is that you are not going to have to go search for any other types of results that are there. What's going to happen is that all those things that we normally pull on the web, as you get all those lined up, those, it's going to be interesting to see how they present themselves, but those types of information, digging deeper down into what you are going to be right there on your phone. For instance, while listening to music on Spotify, you can search for more info on an artist, or if you're talking about a restaurant, and well, there we go. Or if you're talking about a restaurant in WhatsApp, Google can pull up the data on the place and even help you make a reservation. And this is not a feature of the app itself. Rather, it is a helper that lives inside the entire operating system. This is a major move for two reasons. The first is that it really brings Google back to a place of dominance as the glue that holds your digital life together. The web has thrived and grown in no small part because Google's ability to track, organize, and understand all its different pieces. Now it is able to do the same thing with every app running on your phone. It allows Google to take back into the search game by speaking the common language of apps. It gives the company a second life with access to user behavior and needs. But secondly, it starts to show how Google can be the interconnecting layer between the apps themselves, a kind of neutral staging ground between one action and another. This is a sea change on how we use our mobile devices and how mobile apps interact with one another. Currently, we use OS-defined tools, which lets apps interact with one another, with rules defined by the OS makers, not the developers. But imagine if developers didn't have to think about how their work connects to the rest of the world. Imagine now if OnTap, that's the name of the new piece of software, is aware enough of the core functions of those apps that they can predict what you're most likely to want them to do and to execute those needs. That's the ultimate promise of Now on Tap. However, the technology has its limits. There's no change of service like this will ever make its way onto the Apple iOS, given that the closed nature of the operating system and the fact that Apple will undoubtedly take a stab at the same concept. And Google also has to prove that this kind of natural language processing can work effectively enough to live up to the company's promise of seamless experience. But if the service is as impressive as to what Google just showed on stage in San Francisco, there's a whole new world ahead of us for our devices. One more that's connected more than ever. So I'm sure we're going to hear a lot about this tomorrow, folks. And I do expect the Android devices themselves are pretty amazing what they can do. So it is definitely still an Android world versus a iOS Apple world. And what the Android is winning, because if you take the whole world, 1 out of 2 users have Android. There's a story in the Wall Street Journal that says it's pretty cool, because when they first bought the Android operating system, because they bought that off someone else, they bought it at $50 million, and it was the 2 founders that bought it, even though Eric Schmidt was the CEO at that point. Bottom line is that now that's one of the most important systems that they have flat out, and it is the largest used operating system in devices. But what we are going to see, as I expect, is that these mobile devices are just getting smarter. The delivery of content on them is huge. You know, if you haven't watched Tiger TV on your cell phone yet, folks, do it. You know what's amazing about it? What's really amazing about it is that because the screen, I think, is a little bit different. You know, you can watch Tiger TV if you have an internet TV on a 50-inch screen, 60-inch screen. It comes out great, pops right, in a big way. It pops just as well on a little 6-inch screen with the charts. I mean, it's so clear, it's amazing. You know, so check it out when you get a chance. But I suspect, all these apps that are coming out, we're going to see a huge amount of productivity continue in the marketplace. Yeah. Let's go take a look at the couple equities out here, man. In fact, maybe tomorrow when we get the technology, and our man, Mr. Dave White, will talk about this a little. I'm sure he has some stuff on it. Ultra, ULT, Ultra Salon. There's nothing like selling ULTA. Let's see what we got. ULTA. See if they... Okay, so Ultra Salon closed at 156.27. That's trading at 158.39. And let's see what they have to say. So their gross margin is 34.9%. Same-store sales are up 11.4%. Their net sales were $868 million. They see second quarter net sales of $854 million to $868. The earnings per share for the second quarter, they see coming in at, that's right in the middle. The estimate is 109. They see 107 to 111. Bottom line is that they did beat the earnings per share this quarter. The number was 93 cents. They came in with $104. Their revenue, the revenue number was 846. They come in at 868. So that's a big number. There's no two ways about that. That is a high-end number. Look at the margins in this business are just absolutely huge. Same-store sales were huge too. They see sales going up for the fiscal year from the mid to high teens. So that's a big number. And that was where they were. They were from 15 to 17% last quarter. Now that looks to me just about the same. Big numbers though, no doubt about it. DECK. Let's go take a look at Deckers Outdoor. See what they have to say out here. Deckers Outdoor closed at $71.20. This is trading right now at $74.30. That's a nice little pump up. That's a dead cat bounce, though. This is an equity that came down hard. Let's take a look at this. So this equity is already down from a price point of $99. Numbers go like this in Deckers. The fourth quarter net sales were $340 million. They beat the estimate, though. They beat it pretty good, too. The estimate was $321 million. They did $340. Nice number. Look at that big loss. The loss, though, the estimate loss was $1.17. They lost $1.52. And the stock's up, but you can see what happened. You know, it's wild, folks, is that what does happen. Now, this might be a little turnaround here. What I've noticed is this. When you're going through books, balance sheets, when an equity has been going down for a long period of time, you gotta picture something. Balance sheets themselves, large accounting firms, they know every trick in the trade. Meaning it'll stay legal, but guess what? This thing's stuffed all over the place. When I'm looking at this number, when you get the revenue going up, and then the estimated loss was $1.17, but they come in at $1.52, I think they threw everything in there. They knew that was there. They knew that maybe they're turning around. Let's throw it all in there right now, clean those books up. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. And don't forget, folks, our man, Mr. Andy Hecht, is going to be coming up next, growling and prowling with you, as he does every Tuesday and Thursday, 5 to 6 Eastern Standard Time. And don't forget, all the programming at TFNN. Get right on your cell phone, tfnn.mobi. Now, I want to leave you with this, okay? You know, I got a phone call today, folks. It was pretty cool. You know, we've been on the air now. I guess I've been on the air about 19 years, 20 years maybe, okay? And I got a call from a Tiger, and the way that he had actually started listening is that I used to do an update with Schwab when they had the place down in New York, and that was early in the morning. Bottom line, then I had Edward Vieira on, I had Ron Paul on, and, you know, it was a great story because what ended up happening, he said he had listened to them here. Make a long story short, he ended up saying, okay, what can I do to make this country better? He ended up being this is out of Colorado, he ended up being a delegate to the convention in Tampa for the Republicans. Okay, so the bottom line, what this is all about, this little segment right here is all about whatever we can do and whatever you think you can do to make the country better, do it, okay? And I'm going to leave you with this part of it, because the hypocrisy inside the larger bureaucracies right now has to end. And I know you can't tackle everything. We can't tackle we can tackle a larger issue, but the way to tackle a larger issue is to slowly don't let things go by without saying something, and little by little chip away at what you think should be chipped away at. Okay, so this one here, this is pretty wild. Now, we know we have Daryl Martin does a great show every Tuesday and Thursday, does a show with me on Fridays. We do the whole Nadex platform. We trade the Nadex platform every day. And if you haven't traded it, check it out. Particularly, they just changed the spreads inside the Index 100, and they're just dynamite. That being said, when we were on last Friday, that's all it's been doing is raining down in Texas. Huge floods, real problem, right? Okay, so we know big problems. So here's the hypocrisy. Ted Cruz, okay, senator from Texas, right? What do you think he needs now? What he needs is he needs federal help, which was normal, right? There's no doubt that's normal, okay? That totally makes sense, okay? Because whether we like bigger bureaucracies or not, the bottom line is that we have cities, we have states, we all pay federal taxes. Federal taxes go into the federal piggy bank. When counties or states get in trouble, the bottom line is that federal aid comes in, and that's what really gets everything back on our feet. That being said, if you remember, is that Ted Cruz, okay, and when everyone up in New York and New Jersey were getting killed by Sandy, if you remember, he was up there for 3 hours saying that, no, the feds shouldn't get anything. In fact, okay, so check it out. 2 years after opposing federal aid for Hurricane Sandy relief, Cruz today needs and wants congressional relief for, of course, flooding in Texas, okay? This is his quote. There are a series of federal statutory thresholds that have to be satisfied. Initially, it appears that these thresholds are likely to be satisfied by the magnitude of the damages we're seeing, Cruz said. Texas, we're toward the damage caused by flood, okay? When Sandy was devastating people up in New York and New Jersey, okay, what was his quote? His quote was, the bill is symptomatic of a larger problem in Washington, an addiction to spending money that we don't have. Bottom line, he was against it when it was there. He's for it now. My point is that that's just not Ted Cruz, okay? I'm not picking on Ted Cruz. That is just about every politician, it seems, that we have, whether it's a Republican or a Democrat, and that's how bizarre the whole deal has got. So when I got this call this afternoon, it was so cool because individually, that tiger took it on himself just to take a small piece. And I think each and every one of us, we take a small piece every single day or when we can. It's going to be, it does two different things. Hypocrites will get away with it as long as you don't challenge them on a continual basis. These politicians are so crazy now, folks, that he knows that he said that, but guess what? They don't care anymore. They absolutely don't care, because their understanding, I suspect, is that we as a nation don't care, and we as a nation are not going out there enforcing an issue that is important to us no matter where state, county that you live in, or area of the country you live in. It's got to change. It's insane. I mean, and if I bring this back to the financial business, this has got so far out of whack that you have people that are basically sticking up for banks. It's like, how do you stick up for a bank, and how do you say that the bank is on the level when they've paid billions and billions of dollars, and now they get felony accounts against them, and it still doesn't matter? And that's not going to change, by the way, okay? We've just went through the worst recession, depression that, we've seen in our lifetime. And no one in the banking structure is going to the can. And I'm not bringing all banks into this, because it's not all banks. It absolutely is the large multinational banks. That's the way they do business. When Jamie Dimon came out today, and now, see, so really, this is the cockiness of inside the business right now is amazing. Jamie Dimon came out yesterday, and what Jamie Dimon was talking about, he was talking about that anyone that pays attention to the large voting firms, meaning, okay, you get large unions, you have large institutions that pay attention to how we should vote. And he was hammering them, telling them that they're stupid, okay, to pay attention to them, to go against his pay grade. That says it all, folks. That absolutely says it all. It says that, guess what? I pushed out bad paper, I paid billions of dollars. So what? I did currency rigging, pushed it out, pled guilty to a felony. So what? Now I'm going to come after anyone else who's saying anything about me. That whole thing is insane. So when we take all those different structures, you have to ask yourself, do you want this to get more even? Do you want to stop it in the middle? Inch by inch, life's a cinch. So, inch by inch, do it. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great night, a safe night. Look forward to speaking to you right back here tomorrow. You stay right there. I'm Mr. Andy Heck. It's going to be coming up, growling and prowling with you. Go get him, folks.